famous day. On YouTube.
Hello, good morning, friends, brethren, hangers-on, hecklers, trolls, and anybody else who happened to tune in. Great to have you along with me today. And, you know, I've gotten my share of trolling and hecklers and criticizers lately, but that's fine because everybody's welcome here. You haven't been successful until you've had some people trolling you. Now, let's see. It looks like I've lost my screen. That's a great way to start out. So maybe we need to make a new one here. Let's see. I've lost my charts. Where have my charts gone? Let's see if we can get them back. Let's see. I think it looks like I've got it back. I hope I didn't lose you all there. I had to click out for a second. Let's see if we're back on here. It would not be a show without a little technical difficulties, right? There we go. And what are we looking like? Are we still there? I think we're still there. And let's just see. Yeah, we're still there. We're back. Welcome back to the show, folks. That was exciting. All right, so we basically have a ramp up through the Fed meeting. There's a Fed meeting. Newsflash, folks, there's a Fed meeting going on right now. It was going on yesterday and today. The end result, the grand conclusion, the exciting conclusion of the Fed meeting is expected to be nothing. No change in rates and nothing. Meanwhile, over in Congress, they are actually doing something. There is movement in the North American trade deal. The United States-Mexico-Canada agreement is going to be replaced, and it looks like the USMCA, as it's called, may be voted on as soon as December 18th, as it looks like the Democrats have put together some sort of deal here, and we'll see if that passes. There is a tariff deadline coming up on the 15th, and the market seems to be there's vol up here. Now, I would suspect that you're going to see vol start to come off once we're expected to have no rate cut at the end of the meeting today, but we don't know for sure what's going to happen until that has happened. But once we have certainty that the meeting's over and there is no rate cut or no change in rates, we should possibly see vol come in a little bit right after that. Taking a quick look at the VIX right now, and you can see we have more of a ramp up going on. The VIX itself only up 12 cents right now, but look at VVIX. VVIX currently up 390 today, and this is evidence of buyers in VIX options on futures, of course. So let's take a quick look over towards VIX options on futures and see if we can figure out what people are buying today that's making this VVIX pop up so much. So I'm just going into my time and sales here in Thinkorswim application. I'm going to clear out all my filters so we can get everything here. And it looks like, so some more DEES buyers here. We've got DEES 12 put buyers. 12,000. Someone buys 12,000 DEES 12 puts. There's also DEES 14.5 calls. I can't tell if that's a buyer or a seller, but look at this. VVIX action is once again to the downside here. Now, if I look right below there on the time and sales, I can see call buyers. What I'm going to do is I'm going to sort this by highest volume first and see if we can get a better handle on this. But it looks as though we've got put buyers here. Put buyer, put buyer, put buyer. that is cranking up the VIX. So this is an important lesson, folks. When you look at the VIX, it doesn't necessarily mean that there's upside fear in the VIX. It can mean people are buying downside, and it looks like a lot of people are buying downside here today in the VIX. Look, 12,000 of the 12.5 puts trade. That's downside buying. That's people betting that volatility is going to come in. So not necessarily, so this VVIX pop up is not necessarily meaning that volatility is going to explode. Dig in a little deeper here and see what you've got. Now, there are some call buyers here, certainly. But I'm seeing, almost an equal amount of put buyers. Here we've got these 26 call buyers. Certainly, VIX options are used to hedge portfolios. So the average retail customer or retail fund trader owns the S&P 500, owns the Russell, the IWM, owns E-minis, owns NASDAQ. And to hedge that, they might choose to buy some VIX out of the money calls. That way, if the market moves down, the VIX out of the money calls will gain in value, and they will offset some of their losses from the market moving down by their gains in the VIX. That's what it means to hedge with VIX. And thus, if I was a fund manager, what would I look to buy? Maybe I'd look in here and I'd say, oh, I'm a little scared in the next month, so maybe I'll buy some of these Feb 25 calls. That's, I don't know. I wouldn't trade these options. But anyways, that's what they're doing, is buying out of the money options to hedge their positions, to hedge their longs. Because if you're long a portfolio of stocks, when you get scared, you don't necessarily want to just sell them out, because then you're going to lose the dividend gains, which income from dividends is a important part of overall percentage gains for these guys. So they don't want to give up those dividends by bailing out of these stocks. They want to hold on to the stocks so they can continue to collect the dividend even if the stocks go down, but they hedge themselves by buying puts, and that's when you get this ramp up in the VIX. Now, VIX 1590 is not an extreme level. That's a mid-level 1590. So we've been kind of in the lower end of things lately. So it seems to some people like, wow, 1590, we're getting up there, but not really. This is just sort of we're back to sort of a mid-range from being in a lower end of the range. However, when you look at the overall picture of the major indices, we see them all at the top of a big rally, and I'm not saying the top as in the end, but they're just they're moving straight up, and thus you would think with them at almost the all-time highs that the VIX would be a little lower than it is now, and thus it's interesting that the VIX has gone up over the last few days, and most people are chalking that up to uncertainty to do with the Fed meeting today, but also around this December 15th date. Now, what's important about this December 15th date? Well, first of all, there's that U.S., Canada, Mexico, USMCA deal that's pending. Second of all, there is still that China deal looming out there, and there are tariffs that are supposed to go into effect soon. So the question is, does the Trump administration delay these tariffs or not? There's more tariff rumblings last week from Europe with France versus the U.S. and tariffs, and all these things are contributing to a higher VIX. It's not because the market is selling off right now, because the market isn't selling off. The market is barely moving, and actually realized volatility in the SPX is very low right now. But people have worries, and the worries are what's bringing up the VIX right now, not anything that the market is actually doing. I posted this chart today. Let's build it together so that you can see how to build this at home if you want to. So I'm on Thinkorswim. I pulled up the SPX. Then I'm going to Studies, and I'm going to add a study. And this time it's not going to be a comparison, but I'm going to go to Volatility Studies and pick out implied volatility. That's going to show this chart below, then I'm going to go and I'm going to add to that, add another study, go to volatility studies again, and I'm going to go to historical volatility. And you're going to see SPX right now, the historical volatility around 7, the option volatility around 15. So the option volatility is like twice as high as this thing is actually moving. That means that somebody is expecting a move. And when people are expecting a move, it's usually right. The options are usually priced somewhat correctly. So that means that there's going to be a move at some point according to these options. Now, it could be wrong this one time. That's certainly possible, but it's pricing in a move here, folks. So now what could happen is some of these issues could be resolved, and this could spike and move to the upside. But there is a move priced in here right now. So look for something to happen here. This is real money at stake, folks. And when people come in and buy volatility, they're spending a lot of real money, and there's a reason for it. It's not just like, fun and games. So watch. When you see this stuff happening, think to yourself, something's going on, and try to decipher what you think it might be, and more importantly, or very importantly, when is it going to get resolved? What and how to position yourself for a change. Now, there's a couple ways you could position yourself here. You could say, well, somebody believes something's going to happen in the SPX. Maybe I should piggyback on, and maybe I should buy some puts and get ready for this move. Or at least maybe I should hold off on buying that stock I was just about to buy until this gets resolved a little bit. The other thing you could do is you could fade this. You could say, this is much ado about nothing, and go in and sell some volatility. How could you do that? Well, you could go in and you could sell some of these VIX products. You could go in and you could sell SPX puts. Let's go to the SPX here for a second. We haven't done this one in a little while. I'm going to go under trade, all products, SPX, and let's look at some Jan puts here for a second. SPX currently 31.35. You could go out there and sell some Jan puts. You could sell some of these 25.90 puts. What's the likelihood that this goes all the way down to 25.90? Not very likely. Well, for each put, you could make $300 to sell like these 26.70 puts. So that's one way of fading this fear. Sell these puts. Now you don't necessarily need to keep them short till expiration. As soon as the fear goes away, this stuff's going to come in somewhat. Remember when we looked at our chart back here and we saw, that's a strange looking chart. That chart I just showed you where we saw historical volatility versus implied volatility, and we saw 16%. Well, when we look on the options up here in the corner, you see for Jan options, 15.9%. So this is the implied volatility here. That's where the chart got that 16% from, the implied volatility of these options. So there you have it. Now, I have this set right now, kind of, you see, it's only showing D's and Jan options. Well, why is that? Well, I have my Thinkorswim set to do that right now. So let's fix that. Let's set Thinkorswim so that we can get weekly options in here. And quick way, you can go up to the corner to setup here and click on that. And go to application settings. And we can go down here to general display. I think it's display. Going to display and see non-standard option types, weeklies and quarterlies and minis. So let's select all these different options so that we can see the weekly options. Okay, now when we go back to SPX, it's going to show all of these weekly options, which we really kind of want to see because we want to have more choices for what we can sell here, because this is going to give us each week to sell. So we could go out and say, I'm going to go to December 30 and I'm going to sell the 2800 strike. Can sell it for $200. So what if we wanted to sell one of these puts, the December 2800 puts in the SPX. SPX is 31.35 right now. So if I queue that up, and right now my account has all the buying power is in something else. So it's not showing the actual buying power. It's saying illegal. But we can see how much it would cost us to do this trade by going into the Analyze tab instead of queuing up the trade. So if we go to the Analyze tab and we select similar trade here, 2800 put, I think it was the next week out. Let's see, December 30th, maybe 2800 put, and we select selling one. We can go down here and we can see that it would cost us 29,000 in buying power to sell the one put. So that is one reason why, as retail, we might not want to choose just selling a naked put in the SPX, because it takes a lot of buying power, of course. Now, what could we do to do a similar trade without taking up all that buying power? Well, we could sell a put spread instead. So you wouldn't make as much money, but it would take a lot less buying power. So let's say we sold the 2800 put and we bought the 2700 put. Okay, so now you're only making 90 cents instead of $2, but the buying power is only 10,000 instead of 28,000 or 29,000. So that's a way to put a similar trade on without having to put up the $29,000 for one trade. But another way you can do it is you can sell these. You can buy puts or sell options in these VIX products, and you're going to be dealing with a lot less money to do so. All right. Hey, what's up, Brent? Let's see. If Trump backs off tariffs, we could see. Why did I call you Brett? Brent. If Trump backs off tariffs, we could see massive vol crush. If they allow them to go into effect, I suppose a spiking VIX will be justified. Should be interesting. Yeah, it seems like in recent time they always back off the tariffs at the last second, but I guess we'll have to wait and see exactly what happens there. I guess an interesting question is, what is the trade to put on? What would be an interesting trade to put on between now and the 15th? Is there something we can do right now that we would take off before the announcement that would help us out? And to do something like that, I would almost look for a long gamma trade, a trade where you're buying options. If you were to buy options in a lot of these products right now, they're not going to decay very much between now and December 15th announcement, because people, it's basically like we're in a holding pattern until then. So this might be a good time, if you're interested in buying some premium in something, to buy something, and maybe you get a move, but your plan would be to buy something, and then you either get a move or you don't, but either way, get out right before December 15th, when we're expecting either something big to happen or the big vol crush. It's kind of like a lot of those trades where people put on long strangles or long straddles like 2 weeks before earnings, and then see if you get any play, but bail out of it right at earnings, because we know that this period over the next couple of days, nothing is really going to decay very much. The theta on stuff just kind of gets held up and accumulates until that actual, I guess you could call it a binary event of December 15th. So, so that's a thought on some sort of trade to put on. This MJO came out today. The leveraged MJ sector, and this is these guys from Rec Shares who had V-Men and stuff like that. It's Greg King. Greg King, of course, one of the founding fathers of a lot of these VIX products, along with Stuart Barton and those other guys, has come out with this MJO, which is a leveraged MJETN, and I bought a token 50 shares this morning of this one. It looks like it's only traded 278 shares so far today. But once again, this kind of product is an ETF that's following this market in the stock. So it's not as if supply and demand is going to be moving the price as much as the underlying stocks that are represented by this ETF. So not too concerned about the lack of volume. It is interesting, though. You would think that they would have more than 278 shares trading on the first day. They need a little bit better marketing, I would say. Hype this stuff up a little bit more. Anyway, out of that 278 shares, 50 of them are mine so far. So I did my part, guys. All right. And yeah, it looks like hey Scott, what's up, buddy? It looks like Scott from Rec Shares was on StockTwits this morning. And Brent, welcome to StockTwits, buddy. It looks like you're just, well, I know you've been on here before, but we'd love to have you here. I'm going to be your first follower here. Come join the party. StockTwits, of course, is dear to my heart because it was where I actually came out of as far as VIX stuff. The UVXY thread on StockTwits was the origination. That was where we started the Facebook VIX trade group, came out of that. A core group of guys on there were involved. And Volmageddon weeded out our group a lot, unfortunately, but there was a core group of guys on UVXY. There's still guys there. We used to do guess the price of UVXY every Friday, and we would generally share knowledge about the VIX and how the VIX term structure works and whatnot on StockTwits. And out of that grew the Facebook group and other things. So StockTwits is near and dear to my heart. If you look at my profile on StockTwits, you'll see I have this coveted check mark next to it. I haven't managed to get, it's like a verified mark. I haven't managed to obtain that on any other platform yet. Facebook denied me. Twitter, not big enough. Instagram, not a chance. But I lobbied these guys and lobbied them, and they gave me the check mark on StockTwits, which I'm very proud of. I was thinking that was going to lead to verification on Twitter and whatnot, and it hasn't quite yet. I guess I need to get a little bit bigger. But thank you, StockTwits, for supporting me and trusting me to kind of be a representative, because I try to represent StockTwits. I keep a squeaky clean image, and I try to raise the level of the conversation on there. Report irresponsible conduct and that sort of thing. So thanks, StockTwits. Thanks all the guys who started it, and let's move on. All right, so how's the position going? Let's talk about our position here. Right now, I have this position in VXX, and it's been interesting. I almost didn't want to talk about this because it seems like an anomaly that has been working for me, which I don't want it to go away. I guess some people could just turn it off and it could go away. But let me tell you what I'm talking about. Let's pull up the option screen here in VXX for a second. You can see my position here if I get out of the way. Well, maybe you can't because it's kind of falling off the screen here. Let me fix this. There we go. And there's another screen underneath. This is all part of this whole thing with having problems today. Okay, so you can see my position here. I'm long some December 13 puts, which are definitely going out worthless. I've got SEP 7, 8, and 9 puts. And what I was noticing yesterday with the SEP stuff is it was really weird. It was like that thing that was happening with UVXY before. Like, let's take SEP 7 puts here. 8 bid at 14. I was noticing I would go in 9 bid for a 1 lot, filled immediately. And then I would go in with these 9 puts, and I try to sell a 1 lot, 1 penny better than the offer, filled immediately. Then I try to buy these 8 puts, 1 penny better than the bid, filled immediately. Then I went in this morning, and I offered out some of these 7 puts. I figured I bought them for 9 cents. Let's see if I can get filled immediately on the offer too. So I went in, offered some at 13 cents, filled immediately. So it was like, that's not a lot of money, but buying it for 9 and selling it for 13 is money. And I don't understand why they would sell stuff right off the bid and buy stuff right off the offer, but it's some like little quirk with their programming that allows me, let's try to do it again. So one of these puts at 13, which has allowed me to kind of get good fills. Yeah, see, look, I just offered an option at 13 of these 7 puts. I bought a bunch one at a time for paid. The market was exactly the way it is now. Actually, I think it was 8 bid at 15 yesterday. I came in 9 cent bid for one lot, filled. 9 cent bid for one lot again, filled. And I did that, 7 times or something. Then this morning I come in and I offered them 1 cent off the offer at 13 cents, filled. I can show you right here. Here's my trades. The top 2 trades here. Sell a one lot at 13, filled. Sell a one lot at 13, filled. I tried to buy one back paying 9 cents, was not filled. But actually, you can see here the only fill is the top one. Let me switch this to fills here because that's a little confusing. Okay, so here we go. So sold 2 at 13 right here. And if we go back to yesterday, if I just highlight this option, I'll tell you what I'll do. This is easier. So if I go down to these 7 puts, if I click on it, it's going to show me all the trades on those. So look, you can see bought 1, paid 9, bought 1, paid 9, bought 1, paid 9, bought 1, paid 10. And then you can see my activities today, selling them at 13. And you might say, oh yeah, that's only $3 or $4. But it's just interesting. Why would they trade them 1 cent off the bid or offer like that? And if I could sit here and make $5 every couple minutes every day by just sitting here and pressing buttons, then that's a good thing, right? I mean, let's try to sell one more at 13 here. Sell one more at 13. Now, see, it didn't happen that time. Sometimes I'll just cancel it, and then I'll wait 2 minutes and put it back in again. But it's strange how that stuff works that way. So yesterday what I was doing was I was selling these 9. I was trying to sell these 9 puts at like 46, 45 cents and buy the 8 puts paying 23 cents. Trying to basically sell 1 of these to buy 2 of these, like almost. And they were filling me like 1 cent off the offer. It's funny, like I'm the only open interest and the only liquidity in these options, and yet people are willing to trade with me and almost pay my offer or hit my bid on it. I don't understand why that is, but like I said, I almost didn't want to bring it up because it's my own little thing here I got going on. So anyway, let's look at the open interest in these strikes. There's almost nothing here. The only 4 of these have traded today, and I think I'm probably the whole open interest. Yesterday we had a little bit more action in some of these strikes, but nothing's going on out here in SEP. And but I've managed to find a little back and forth trade for some reason. But my overall position is just long these 8 puts, 9 puts in SEP. And I know they're way out of the money. They're basically worthless right now, but they might have some value if this thing can roll down lower over time. So that's kind of like the goal, is to put these in my pocket, and if we stay like 10% or over contango for a few months in a row, then these things should have a real chance of at least. We don't need to get to the 8 strike for these to go up in value. We just need a little down move, a couple bucks down. So that's kind of the plan with those right now. And I'm sure that there are better methods of shorting volatility out there, but this is a relatively kind of like safe one that's going to, like my P&L isn't going to move too much even if we get a spike here, because these are so dollar cheap that they're not going to move around that much. However, I have enough time where some good contango over a couple months could make these things really in a spot where I can sell something against them, either sell them out straight out, sell something against them, or mess around just with the wide market, offering stuff on the offer, buying stuff on the bid to kind of trade around them. So that's kind of the plan with those. All right, I don't want to stay on too long today because I did come on for a long time yesterday, and I know people have other things to do than to watch me, gab all day. Yeah, Roman Gecko. Maybe it is a reward. Maybe they're rewarding me for making a market in stuff that nobody else seems to be making a market on. Who knows? Anyway, we'll see what happens moving forward with the tariffs and all that kind of stuff. Now, people got mad at me on StockTwits for not being able to nail me down on what I think is going to happen. They're basically saying you can't have it both ways. This is what we do as people who comment on the marketplace. We know that, well, what I know most of all is that I don't know what's going to happen, and people get mad at you because you don't tell them exactly what's going to happen. We don't know what's going to happen in the future. And those guys who come on and say they know, CVNA is definitely going higher this week, that you can come on and say that, but if it doesn't go higher, then those people just disappear and pretend like it never happened. A lot of market commentators, we're kind of like psychics. We come on and we say stuff that is kind of can be interpreted different ways because we don't know exactly what's going to happen. So I can provide some sort of content that gives you more insight without saying exactly what's going to happen because we don't know what's going to happen. So people criticizing me for not telling them exactly what's going to happen, I think that's the right move to make, is to admit the things we do know and admit the things we don't know. And nobody knows what's going to happen tomorrow in the market. I can tell you I know what's going to happen 2 days from now in the market because that will be, or 3 days from now, because that will be Saturday and it will be closed. But beyond that, I don't know exactly what's going to happen in the market. I can kind of describe what we're looking at now, but that's about the extent of it. All right, let's go to the term structure for a second, and then I'm going to end. I promise I'm going to end this one because it's getting too long. And when we look at the term structure, I see a problem here. Let me know if you guys see what the problem is. I definitely see a problem here. Let me see if I can fit this all on the screen and get out of the way here. Okay, so what is the problem? The problem is this spot price is right next to the futures price, and it's not as bad as it was a little while ago, but it's pretty bad. Spot higher than the front month future. That's something that can't be sustained forever. It's pretty interesting that it has been sustained for a couple days now. I would much rather have the term structure like this than have this future move up to meet spot and have less contango. This contango number down here for a long-term short is more important to me than having the spot below the futures. When I see a term structure like this, it makes me think that there is some anticipation out there that this spot price will be moving lower, because all it takes for this to look beautiful again is for a spot to move slightly lower. So it kind of seems like we've kept our whole structure of the term in place except for spot, which to me means an anticipation of this spot moving lower. If there was an anticipation of a big spike, we would see these futures move up above the spot price, move significantly above the spot price. We would see, if there was an anticipation of a big spike, or more of an anticipation of a big spike, we would see this flatten out more. We'd see the front month future curve more flat compared with the other futures and move higher above spot. It's like 2 days now where we've got spot moving through the futures and this term structure of steep contango staying in place. So to me, that means that this term structure is kind of shaking off this up move in the VIX and just anticipating it just moving back lower again. You might have a different view, and I'd love to hear it. If we look quickly at our contango level throughout the year, which I love, as you know, I love to look at this, and we're going to get rid of the back months. We can see that we are maintaining. Now, everything below this red line, everything above this red line means we're in contango and how much. And you can see that we're staying above this 10% level here, where we've been above for a long time. This is very significant to me. If you look back, even over this year, we've pretty much been below this 10% line, and now we've had this extended period above that 10% line, and the longer we can do that, the more of a chance my far backdated position has. So I love seeing us above 10%. If we could stay above 10% for another month or two, that would be a thing of rare beauty for my position. So that's what we're rooting for here. If we could ask for a Christmas present, it would be 15% contango. All right. Thanks for watching, folks. Please continue to criticize me. I love all comments, even when they're negative. Heckle, criticize, whatever you want to do, as long as you're watching. My grandfather was a politician in Rhode Island. He was in the state senate for South Kingstown, and he taught me that all publicity is good publicity, and if you got people yelling at you, at least people are watching. So thanks for all your criticism and all the kind words as well that I get. And I do check my emails, and I do check Twitter, so leave any comments wherever you'd like, and I will get back to you. I'm not too big of a YouTuber to talk with you personally about anything you want to talk about. So please reach out to me if you'd like. Thanks to all the Patreon members, by the way. If you haven't signed up for Patreon for the Short Vol Show and for the VIX Crush YouTube channel, you should. This is one of the only sources of how we keep this whole show rolling. We're going to have a bunch of interviews coming up, and I'm working on some gear to get out from behind this computer and come out in the world and meet people. I'd love to go do some volatility conferences and stuff, but I can't do that until I get more support from my viewers. So, $5 a month. You guys are traders. You guys got money. $5 a month on Patreon would really help me out. For those of you who do help me, thank you so much. I really do appreciate it. I don't mention that enough. So thank you to everybody who supports and look for some great content moving forward from me and the rest of us at the Short Vol Show. See you soon, folks.